Well, it's been an exciting day, and we've heard a little bit about risk from some of the other panelists and throughout some of the other sessions. So our last session, or one of our last sessions today, is on the ground shaking developments in financial services, risk and fraud. I'd like to introduce Doug King, who's going to moderate this panel. And gentlemen.
Thank you very much. I don't know if the panel will have a few extra minutes to spare. So do we? This is a very tough time slot. The crowd is kind of dwindling. Coffee's running out. Sugar high from the cookies are running low. But I don't know. Do we still? Do we have the little tunes that we can get us started with? Maybe get the blood flowing a little bit. Anything AV guys? Thumb up, thumb down. We're starting off with a bang. All right, we can cut that. Not what I had in mind. All right, by way of introduction, I am Doug King with the Federal Reserve Bank of Atlanta, and more specifically, part of a group called the Retail Payments Risk Forum. Hopefully a lot of you in the room know us from our Portals and Rails blog. Any showing of hands, does anybody know the Portals and Rails blog? All right, we would like to reach more of you guys, so I encourage you all to check that out. But really what the Retail Payments Risk Forum, we're all about collaboration between financial institutions, third-party payment providers, regulators, and law enforcement, bringing those groups together to really understand the risk landscape in the payments space, and then what can we do from a mitigation perspective to mitigate those risks. So fortunately, we have the opportunity to work with a lot of the financial institutions that are here today and spend time talking to others in the room, as well as the panelist organizations on these issues at hand. So with that, I would like for the panelists to each spend a few minutes just giving you a little background and maybe that small little sales pitch on their company. If they go too long, I'll pull the plug and cut them off. So maybe we'll start on your right, down at the far end of my left with Murray.
Well, hi, Murray Walton. I'm Chief Risk Officer for Fiserv. Fiserv is very proud to call Atlanta our operational home. It is our largest single concentration of people and assets, although we actually operate in about 240 some locations around the world. We provide technology and outsourcing solutions to the financial services industry, principally banks, credit unions, but increasingly third-party biller organizations. We have also developed consumer brands, including our Pop Money person-to-person payment solution that has several very prominent organizations, including Citi and PNC, that are sort of flagships for our Pop Money product. 16,000 clients around the world, and some statistics about who we are in the payment space. 1 in 3 U.S. banks uses a Fiserv account processing platform as its system of record. So we have fairly extensive reach in U.S. financial institutions. We move about $1 trillion of other people's money every year in our digital payment solutions. One of those based here in Norcross is formerly known as CheckFree, a very commanding share in online bill payment, literally invented the space, and 3 out of every 4 online bill payment transactions any given day ride our rails. We also have a large credit and debit processing operation, the previously mentioned person-to-person payments business called Pop Money. All of this together generates about 20 billion digital payments transactions a year, again aggregating to about $1 trillion. We know something about risk because it's our job as the provider of both applications and hosted solutions to enable our clients to operate in a prudent and risk-managed way. We think we're pretty good at it. We have a good reputation with our regulators and, more important, with our clients for the way we manage payments risk. And it's a real pleasure to be here today with such a great panel talking about a topic that I live and breathe every waking hour every day.
My name's TJ Horan. I'm the Vice President of Fraud Solutions at a company called FICO. And I know from spending time in the exhibit hall, some of you know a lot about FICO, some of you don't know anything about FICO. So we're just over $700 million in revenue. Many of you, if you've come in contact with FICO, you know about us from the FICO score, right? So that we're the FICO behind the FICO score, along with our bureau partners. We also have a series of solutions that kind of hit the whole life cycle of a customer for financial institutions as well as for insurance companies as well as the government sector. So you can think about our solutions from how do you go find customers in terms of marketing, how do you bring them on board in terms of origination, how do you manage them in terms of managing their risk and their overall relationship they have with you, and then also from a fraud perspective, and then what do you do when customers are delinquent? We have collections and recovery solutions. The two biggest aspects along those areas of our business are our customer management area, where we've got a product called Triad that we distribute through many of your financial institutions and then many of the partners and other players that you see here, both on stage as well as in the exhibit hall. And then our Falcon product, which is our fraud solution. Here in the United States, we see about 90% of all of the credit card traffic is going through our Falcon fraud software. The ratio, if you look across the globe, is about 2/3, so about 66% of the overall traffic goes through Falcon in some way. That allows us to build a pool of over 2.5 billion cards that we can build models and analytics on to help people solve fraud problems around the payment card area. So we've been in the fraud space with Falcon since the early 90s. It's a space we know pretty well, and it's a space that, you know, along with our other partners, we continue to bring new solutions and extend that to other payment vehicles. The other thing we've been working on at FICO is launching and bringing more of our applications into the cloud. So we've recently launched the Falcon Analytic Cloud, which is a way to kind of consume a lot of this technology, including some of the fraud technology, in ways that you know, are different than the way you've typically gone through an on-premise type installation. So I'm delighted to be here. I look forward to the discussion we have. And Jonathan, over to you.
Thanks, TJ. Good afternoon, everyone. My name is Jonathan Hancock. I serve as TSYS Director for our fraud management solutions, providing solutions for our issuing processing clients across both North America and our international business, which is primarily out of Europe. As you can tell from my accent, I'm a country boy from southern Georgia. But I'm based in our UK office in York in England. Spend a lot of time in beautiful Georgia and Columbus. So TSYS are a global processor. We provide the people and the technology to process credit, debit, prepaid, charge card transactions across consumer and commercial banking businesses primarily. We also have quite extensive acquiring business in North America and worldwide, as well as in the direct consumer business through our work with NetSpend. From the issuing perspective, we have around 400 clients worldwide. We employ over, I think, 8,500 team members worldwide. Corporate head office is in Columbus, down the road. And our international office is based in London.
All right, thanks. So hopefully everyone is buckled in. I did not come up with the name for this panel, but it will be ground shaking. So buckle in, there's seat belts. I figured just to get us started off before we get into the questions, and Murray had the great suggestion of, let's paint the landscape on why we're dealing with the types of fraud that we're dealing with today. And I think kind of as the day has evolved with other speakers and other panelists, we could have used them as just a great intro to this. But looking at where payments were yesterday and where payments are today, I thought Pamela, during her great lunch speech, very heartfelt, I thought it was awesome, but she stole my thunder about the pulling out the booklet with the card numbers. I will never forget shopping, and I might be dating myself as a youngster here, but shopping with my mother and thinking, why is that clerk pulling out the book and looking through the number? Presumably all those clerks these days are blind after trying to read those little bitty numbers. But the days of the knuckle buster and the checks, we very much have moved from a paper-oriented batch processing, all those carbon copies that were batched up, the authorization, let's just make sure this card's not a hot card. There was really no real time. So paper-based and batch to where we are today, in that payments are happening real time and they are electronic. Yes, the paper check is still around, but majority of those paper checks, they might start off as paper, but guess what? They're electronified really quickly. We're no longer, as Murray touched on the bill pay aspect, we're no longer, I shouldn't say no longer, but more and more bill payments are going electronic. We're not quite there. I put the mobile phone on there. We're not quite, I would say, yet to this whole mobile payments ecosystem. But if you're crazy if we do ignore it. But no doubt there's clearly been this sea of change from paper batched payments to real-time electronic payments. And as this change is taking place, we have a whole lot of non-bank providers who are banks might say infringing on a space that they've owned for decades. While many of these players that you see here the banks are still involved in the payments. They might not be the ones touching the consumer like they were in the past, but they still are ultimately facilitating the flow of payments. I don't think it's out of the realm to think that there are these new young players that would love to figure out a way to how can we completely take out that friction or completely remove the bank from this space. I've got to throw in, I think every panel has touched on Bitcoin, and you'll see I've got the little Bitcoin bug there. Not going to talk about an individual company or individual virtual currency, but I think the technology behind the virtual currencies is amazing, and I think it was the fellow from Bain Capital, I think people are crazy to ignore them at this point. Have a long way to go, but as I've been doing research in that space, what I found interesting, I've looked back at the regulatory environment around prepaid cards, reading some old documents from the early 2000s, and it's crazy to think what people were saying about prepaid and that regulatory and the risk involved with prepaid. And to me, it's so applicable and similar to what we're seeing with virtual currencies today. Just had to get that off. But with all this change in the technology and wanting payments to be fast, want payments to be convenient, having new players who might not understand regulations, or as a lot of banks might contend, not even fair because they are not regulated like we are, that can also be a curse, just like the cavemen, how wonderful we finally developed fire. But not unlike my wife last night, they burned dinner too that first time. So while we want this stuff real time, we want the convenience. That opens new doors, new vectors for these bad guys to come in, and so there are new risks. Not only does that technology open new doors, the bad guys have technology at their disposal as well. So they're able to use this technology in ways perhaps that some of these panelists would like to use technology but are unable to. which creates ultimately threats and risks to the payment system. So the song that unfortunately you guys did not get to hear at the beginning, the song by Stephen Kellogg titled "The Bear." And as you can read, the key rip on the song is, sometimes you get the bear, sometimes the bear gets you. So, and the bear can be that thing, whatever. For instance, are there any Georgia Bulldog fans here? Can I get a show of hands? All right, so for the past few years as an Auburn Tiger, the Georgia Bulldog football team clearly been a bear. Sometimes you get the bear, sometimes the bear gets you. This Saturday, unfortunately, the Georgia Bulldogs has gotten me more often than not. But this Saturday, you know what? The Auburn Tigers are going to get that bear. Yes, War Eagle. So that bear is that one thing that always can be nagging at you. I think Murray's going to give us a good example of the bear. But from a payments perspective, you know, there's a lot of things to be worried about. And these guys up here are battling this bear every day. Someday they beat the bear, but we all know we're never going to stamp out fraud completely. It's part of doing business. We're going to keep trying, and I think that is going to be the ultimate end state, assuming that we can keep the customer experience good. But there's always going to be this battle with the bear. So as we talk about the bear today, I don't know if these guys will continue to use the analogy or not, but the bear here for us is synonymous with fraud. So given that, we have these people who work in the field every day. You know, I'll throw out that first question out there. There's bad guys out there. There's scary stuff. We see this, you know, what is zero-day exploit? There's card skimming. There's smishing. I mean, what do you guys view as the bear, the biggest bear today, and what are some trends that you're seeing as it relates to the bear of this fraud?
So the first thing that of the various and sundry tactics on this screen, the one that is most insidious and the one that I deal with every day on behalf of my 16,000 clients ultimately gets back to social engineering. It ultimately gets back to bad guys whose budgets, by the way, are rising faster than mine. Those bad guys are spending a great deal of time trying to extract enough information from you and me to be able to mount credible fraud on our organizations. And this occurs in so many forms, but the basic email tactic, the idea that you receive an email with a message that is enticing, with a message that prompts you to click on a link or open a PDF attachment or somehow take some other action, it's all over. We've done actually a lot of internal research. We fish our own people every single day. There is always an internal campaign at Fiserv where 300 randomly selected associates get a phishing email of varying sophistication. Guess what? If you do the same thing 6 times on average, you will get somebody to take that bait. The fact that it's a single-digit number of attempts you need to make scares the living crap out of me. But social engineering is, I think, at the root of it all. And people who get good at that are inevitably not doing it for their own amusement, and they're not doing it to see if they can. They're doing it to try to monetize it. And so the biggest message I'd give you is that creating more wary customers, creating more wary associates, creating more wary consumers in general is a very, very good idea.
So Murray, let me follow up with that, and please, panelists, if you want to opine on some of these schemes or other schemes, but given this social engineering, you know, from a fraud perspective, are you seeing the social engineering be used more to commit, you know, card fraud, wire fraud, account takeover, you know, new account openings? What is the big fear that you get then from this information they get through social engineering?
Well, the two we see most often, and again, we operate across the payment space, so we see this in a variety of contexts. One I'll tell you about. This actually, Phyllis Woodruff, my colleague sitting in the audience, is aware of this. It happened last Thursday. 10 o'clock in the morning, a finance associate in a Fiserv office in Lake Mary, Florida, got an email. The email started at the bottom with an email from Jeffrey, Jeffery W. Yabuki, that's my CEO, to my CFO. It said, Tom, as we've discussed, please generate a wire, attached instructions, $94,500 or $550. This should be coded as a miscellaneous executive expense. The email on top of that is Thomas Hirsch, my CFO, to Lourdes, my finance person in Lake Mary, Florida, directing her to generate a wire per attached instructions, which would have sent the money to an offshore institution that I will not name. And Lourdes, bless her little heart, recognized that's not the way we normally execute wires, but there would have been finance associates in my organization who would have said, for God's sake, they got Yabuki's name spelled right, and it's a change from Yabuki to Hirsch to me, and Hirsch is my big boss, and $94,550, that's not really big money. There are a lot of people who would have taken that bait and would have done that. But that was a socially engineered attack on my organization that fortunately wasn't successful. So we got the bear that day. But that's one. Number two is credential extraction. The idea that somebody gets that email that tells them they have a property tax bill past due or something like that, and the attached PDF or this link will take you to details of your situation, and you click on that PDF and you infect your PC with something that's calculated to extract your banking credentials with a Zeus Trojan or a variant thereof. So those are the two ways we see social engineering, first of all, to create believable schemes, and second of all, just to extract credentials.
And I think if you hear those kinds of examples, you realize that putting up defenses for every possible scenario that someone's going to come up with is going to be a very challenging problem. But creating the awareness, right? Because some of these things, this is what we do for a living, and I realized a long time ago that I am no longer the normal guy that I thought I was, or the average consumer. But some of these things that show up actually look pretty good, and I myself might even pause a moment to click on them. You have to realize and promote this kind of culture of always being aware about what's happening, because these kinds of things are no longer just the simple mass-mailed, misspelled, I can see it a mile away from the back of the room that this is somebody trying to get details. These are very sophisticated schemes done by individuals who are essentially running businesses to go defraud other organizations. And to kind of follow up on your question about where we see it, I think that the bigger fear is the instant drain of the financial institution, right? I shouldn't say that. The instant drain of a consumer's account, right? So taking over the credentials and immediately withdrawing all the funds and disappearing, right? That's where we see a lot of financial institutions come to us and say, look, we've got these problems. This isn't happening every day, but when it happens, we have a really bad customer experience, right? That something has occurred where all their money is gone and is missing. And we need help in solving that problem. The second instance that I think is a very challenging problem is the sort of slow drip, right? Meaning that somebody has figured out how to infiltrate the organization with either the appropriate credentials or the appropriate types of information, appropriate knowledge of process and procedure, and slowly take money out over time, right? So that it's not a large out-of-pattern withdrawal. It's something that tends to fit in, and it could go for a long period of time before it's detected. And in that case, you might eventually get the bear, but for a long time, the bear is going to get you. Right?
You asked, taking that back a bit, you asked, who is the bear? I think gone really are the days where fraudsters are there, opportunistic pickpockets or the card skimmers in restaurants. Fraud now is really an international, organized criminal activity. These people sit around in boardrooms with the godfather at the top and look at who they're going to attack. and they have chain of people below them. You be the money mule, you do the SQL injection, you do the exploiting, and you guys do the cash out. Now go away and get your teams working on that. They are extremely sophisticated. They are very smart at what they do. They know exactly what they want to do, and they go after it.
And they do have bigger budgets than we do. That's the point. They're organized criminal enterprises, and they reinvest the way any enterprise does. But I look at my company, and we grow, annually somewhere in the mid-single digits. So for me, as a risk and security guy, to ask for a double-digit budget increase year over year over year, that isn't realistic now, is it? These guys have actually got more money to throw at this than we do, and that's kind of a scary scenario. And I keep reminding my boss of that. So,
without the constraints of any regulation and federal enforcement to them,
roadmaps and rollout schedules and all those kinds of things that we all deal with every day, right? They were agile before agile was cool, right? And so,
unfortunately, we have no supervision. Jurisdiction over those guys. I think you could bring an interesting perspective, John. I mean, as you hear these stories going on in the U.S., and you brought up the point that these criminals that truly are international. I mean, is seeing what you're seeing and the fears in the U.K., do they have similar concerns, or are there differences between, the fraud being perpetrated in the U.K. and the ways the criminals are perpetrating that compared to what we're seeing over here?
I think they have exactly the same problems. That there's slightly different skews on that, in that some of the technology, certainly in the card business, payment card business, is a little different to what it is in the US. EMV being the primary aspect on that. But these guys are also, they're not just committing card fraud and monetizing that. They're often involved in people trafficking, in the narcotic, the drug trade. They're involved in all sorts of nefarious activities that really does span the globe. It's a mafia operation.
Yes. And as we go through, you guys obviously came here to hear certain things, or like others who perhaps have bolted a little early. You might have questions on your mind. If you do, please throw your hand up, and these guys are willing to answer them on the spot. And so that's a sign. They deal with the bear, so they're not afraid of you guys at all. Glenn.
Murray, you made the comment that one of the big takeaways is to create more wary consumers.
Yes.
I agree with that, but I'm curious how you strike the balance between making them wary and scaring them so much that they opt out of the process.
It's actually we were actually having a hallway conversation about this earlier. It's art, it's not science. To be absolutely clear, it is an art. And all the security techniques and technologies that we as panelists and you as practitioners in the field implement, you're still the Department of Business Prevention in the eyes of some people in your organization. The marketing department, the product design people, view me as, if not the enemy, as at least as an evil they wish wasn't necessary. So one of the things that one of the ways that you navigate that specific challenge is is a sort of a user experience testing. And so as you consider alternate ways that you can introduce checks into the process, that you introduce security technologies, background screening, and so on into the process, a big part of this is simply vetting this in advance to get the most palatable alternative that makes me happy as a representative of some fairly conservative shareholders, but also makes my marketing and product design people happy. But it is, believe me, it is an art. And I am the enemy of people in my organization many days for that reason.
I think also just there's the education of consumers, but there's also when you do intervene with consumers, the need to pay attention to how that experience has gone with customers. We were talking in the hallway about somebody had a very positive experience with a retailer that was able to shut something down, and now they associate good things with that, right? And sometimes the last line of defense with a customer, those might not be the channels that are monitored with the greatest sense of discipline, right? But those can have a material impact on how the customer views the types of fraud checks and other kinds of things that you're doing for them on behalf of your organization. And so that's something that we've seen for organizations that have looked at that and rolled that out as a campaign. You see it on TV every now and again. There's somebody advertising that they're out watching behind your back and they're protecting you and those kinds of things. But some of that goodwill can also get kind of undone from an operational standpoint when you're actually interacting with the customer. So that's something that I would encourage people to look at if you haven't looked at.
So when you get that call on your voicemail, or you get that alert from your bank that says, call us, it's urgent, and you call, and the first thing that call center agent tells you is, we're doing this for your own protection, how many of you would like to cram the phone receiver down their throat? Exactly. So I mean, there is friction that security and fraud management creates in that client experience. We know that. But we also know that as profit-making enterprises, we have some obligation, to manage fraud to respond, to acceptable levels, which generally is, little. But it's all in the execution for sure. I've wanted to smack Peggy alongside the head with that phone receiver any number of times.
I think that's quite an interesting dynamic. You asked how it differs between the US and Europe. In Europe, I think it's quite different. I think people are very much, general public are very much aware of fraud. I mean, there's all sorts of stories in the news, on TV, on websites. You hear every day about a load of card details being compromised through some hack, or a fraudster being jailed for using card data and gaining funds illicitly. So people really are aware of fraud. And I think they are, because of that, they are maybe a little bit concerned about using their cards at times, giving their card to a waiter, a server in a restaurant to disappear for 5 minutes and then bring it back to you. What are you doing with my card in that 5 minutes? And also particularly online, about using their card online. They hear about all the malware going around on personal computers to compromise card data and generate fraud and use those cards fraudulently. So people are highly aware of fraud. And I think the banks who demonstrate that they invest and they proactively work in the background to protect their customers from fraud, I think that gives the customer a really warm feeling that they are being looked after, that their bank does care about them, and they in turn trust, I think, their bank more. And then their card becomes that top of wallet card, and they will use it online. They will go through the steps to sign up for 3D Secure, for example.
But the art form there is keeping it in the background, or sufficiently in the background, that it doesn't interfere with, with the routine conduct of my commercial life.
Completely agree.
So that's the art, I think.
So kind of moving along, and we'll bring in technology now into the mix. I mean, I think a huge part of this equation is the authentication. And I mean, this could be in the face-to-face environment. It's obviously extremely difficult, as we talk about, think about we're always connected. We can do commerce wherever we are be it with a laptop, a tablet, mobile phone. It's easy. Presumably, back in the day when we were paying with our credit card or charge card, not everybody had them, and that signature meant something. So I would say even in the face-to-face environment, we're faced with challenges of, one, authenticating that person making that payment is in fact authorized to do so. So I think there's multiple layers of authentication, but starting out there, what technologies are at our disposal to better authenticate? And you can think of the face-to-face environment, the remote channels, but what technologies do we have at our disposal to authenticate that truly is the person?
Well, we view authentication really as having, there are really 3 forms. And then within each form, we actually go, depending on the service, depending on the circumstances, for multiple types. So you start out with user authentication. You know, the username and password, that's very last century. But if you complement username and password, so first of all, you enforce a strong complex password. Second of all, some kind of out-of-band authentication so that it's not only the username and password, but it also relies on a code, for example, sent to a mobile phone. We find that out-of-band authentication to be a good complement in the user space. Tokens are another, and you know, that's, if you will, out-of-band as well. But I used to carry around a little RSA token so that my username and password plus that token would let me into certain systems. So you've got user authentication. We also do device authentication. You've probably noticed this when you get a new mobile phone and you go to use your online banking application or the mobile app and it says, wait, we don't recognize the device. That's probably because the mobile application put a certificate on your device. So that certificate is one form of device. Another is geolocation. We look at where transactions come from. We prevented the employees of a McDonald's franchisee in New England from being paid on time because the guy was traveling in the Middle East, executed a big old wire from someplace in the Middle East, and we candidly, it looked suspicious to us based on where it came from. So we didn't let it go through. Those people didn't get paid. That was a mess. Sorry. But again, so in the device space, you know, you basically look at geolocation and you look at device characteristics, you know, the MAC address on a PC. And finally, the third space, and this is where my colleagues have probably far more depth than I do, but it's transaction validation. Looking to see how that transaction conforms to that user's pattern of use. So if I typically, let me defer to you if that's all right.
Yeah, I think that's, thanks for the tee up.
Okay, you're welcome.
You know, I think that when you look at the explosion of kind of different ways to interact with the financial institution, I completely agree with Maria about it provides a tremendous amount of new data that we can look at when we're looking at in terms of validating those devices, validating device characteristics, validating the location. These are all new data elements that we can use to establish behaviors for consumers, right? But at the end of the day, you know, understanding those behaviors are really what's going to fuel and stop a lot of the scams and the schemes and the other kinds of things from occurring, right? Because you can do a lot of things to protect the front door. We probably all have locks on our doors at home. We lock our windows, those kinds of things. But eventually someone's going to get inside. But when they're inside your house, they're probably going to interact inside your house in a way that's very different from how you go in your house and interact, right? Maybe you come in and you put your wallet or your backpack or your purse down at a certain place. You put your keys in a certain place. You go through a pattern of stuff. You might not like to think that you do a certain level of thing all the time, but you know, I also learned a long time ago, we are what we buy, and no matter who I think I am, I'm really kind of someone else, right? And if you monitor and look at all my behavior, you can get a pretty good idea about who I am. And if you take that to the financial transactions, understanding, you know, who are they paying, how often are they paying, how often do they move money, what are the types of locations where they do that, and then also the behaviors that they do on the websites before they figure out that they're going to move money, right? So like I go into my online banking experience and I have a pretty set idea about what I'm going to do, right? Somebody else who's compromised my details and has come into my online banking experience, into online banking, they're going to probably have a very different usage pattern, even though we both might end up sending a $1,000 wire somewhere, right? Now, ideally, they're probably sending a $1,000 wire somewhere where I've never sent before. They're setting up new payees, all that kind of stuff. But you kind of get the idea that there's more than just the device authentication. There's also kind of the behavioral monitoring that tells you when something is going awry.
We have in the online bill payment channel, the check-free business that grew up here in Atlanta, we have a very channel-specific, behind-the-scenes transaction validation engine called FraudNet. And FraudNet's got, you know, it's got 20 years worth of data about how people use online banking. Despite the tens of billions of dollars we move through online bill payment, total fraud is microscopic in that channel because we know the first 90 days that somebody is a user of bill pay is the most likely time when they're going to perpetrate fraud. That once you've been an active user for 90 days, the risk goes down. And so we permit more after 90 days. We know that a new payee, if someone comes in and sets up a payee, let's say a daycare business, or just for the sake of naming a business. So they set up a payee within online bill payment. It's a payee we've never seen before. Remember, we got 20 years worth of history, right? So we see a new payee in the ecosystem, oh baby, that runs up a flag. We really get nervous about that. And those are payments, those puppies don't go next day. Those things have a 5-day on them, and we do a whole lot of diligence behind the scenes, validating that payee is for real. We're also looking at relatively new payees where all of a sudden there are a whole bunch of different people who are concentrating payments, usually round numbers, into that payee. There are all kinds of things we know because we've got 20 years worth of data about how people use online bill payment. And I'll just tell you this, remember, tens of billions of dollars of transactions run through that engine, under $100,000 of total losses last year. Is that bloody amazing or what? But that's the power of data, and it's the power of knowing your channel. It's also the power of dominating your channel, but whoops. As a lawyer, I'm really not supposed to use that D word.
I'm going to have to pull out the stick.
Okay.
Murray, you had said something interesting talking, I think initially when we user authentication around the notion of user ID and password. And I'm kind of going back to this whole, we've heard throughout the day about friction. I know we had a question that kind of touched on that, but you threw out, make it a complicated password. As a consumer, I get so frustrated when I have to go to a site and it says you must use a capital, lowercase, number, and a digit, because I know as soon as I create that, it's lost. Or I'm going to write it down and the bad guys are just going to get it when they find it. And then we touched on other tools. What do you guys think? Do you think the username and password will eventually die off, or is it already dying off?
Thumbprint, baby, thumbprint. Biometrics. I mean, it's very clear. The device manufacturers, my new iPhones, Apple so far hasn't released, as far as I know, their API for the use of their little thumbprint scanner for anybody but Apple. But realistically, biometrics, it's a way of validating I am who I say I am, at least for now. I mean, there will probably be some massive underworld R&D project aimed at replicating my thumbprint someday, but my theory would be that biometrics will become a more important tool to some extent, as they already have in that Apple ecosystem, replacing username and password.
I think that's a key point you touched on for now.
For now.
And I think authentication is really about using a multi-layered approach. Will passwords disappear? Yeah, I think they will. I think there's some really clever, I know there's some really clever, really smart technologies now that run invisibly in the background to authenticate using a whole host of information, of the device ID, of geolocation information, of IP location information and address information, and using that and building up the historic data of that to look for trends in that. And then if you're layering that with transactional detection systems, Falcon system, with customer behavior profile systems, anything that's kind of out of the norm, might be a one-off transaction. I am buying that, once in a lifetime $5,000 plasma TV, really out of band, but other information suggests and supports that it actually is me buying that. Mm-hmm. So it lowers that flag, and I think that all not only helps us to balance and maintain our control over fraud losses, but also provide a great customer experience.
I agree. I think that usernames and passwords will eventually go away as we know it today, right? And I think you'll see it's not going away next month. It's not going away 6 months from now. But eventually we'll look back on this and say, hey, remember when I used to have to come up with this crazy long phrase and remember all these numbers? And people will look at you like you're a Martian, like you still remember phone booths or something, right? So I think that will go away, and leveraging some of these authentication technologies will let people in the door and let people interact. And then at a certain point, there will be other steps that they will go through. Whether that comes from biometrics or whatever, but I think that there will be a loosening of some of those controls, because I think consumers are going to demand it and expect it.
I think there's a generational shift too. I am by far, I am the dinosaur here on this panel, and I'm the dinosaur in the room in all likelihood. But I think I'm, when I graduated from college, there weren't any such things as PCs, okay? I mean, I'm willing to deal with a different set of hurdles than my 30-year-old son is willing to deal with. It's a completely different mindset, and it's, I don't claim to understand it, but I think that there will be a generational shift where some of the things that some of us old people consider to be, just too damn much bother to make it worthwhile, there will be some things that my son will think nothing of. That'll be his normal. Whereas my normal is creating complex passwords that I can remember.
I want to follow up to the notion of just biometrics or whatever, because I think Apple perhaps has changed the game somewhat with the new iPhone. But putting myself in your shoes or a banker's shoes, who's going to own that biometric? Am I going to allow access to the bank, to my customer access to their account when they unlock that phone? Or am I, and let Apple or whoever, wherever that biometric footprint sticks? Or is that going to be is that institution, the FI, going to want to be the holder of that?
That is a great question. And I don't know that I know the answer, right? But I can tell you that the consumer acceptance of biometrics, I think that's one that may shift over time and may shift generationally, right? You notice when the Apple announcement, when the thing came out, they put it out. They didn't quite do it this way, so I'm going to do a little bit of injustice. But here's a new iPhone. It's got a biometric thing, but we're not saving your fingerprint, right? I mean, it was like right there to go combat that fear that they had. Probably because the concern that, well, if everyone thinks that the new iPhone is going to capture and store my biometrics and make it available to all these app guys, I don't know if I want that. I don't know if I want the new iPhone, right? So I think that biometrics from that standpoint still have a ways to go in terms of evolution. I can't see, this may now put me in a certain bucket. I can't see me as an individual being willing to have my biometric information stored in 17,000 different places, right? That to me feels like a real big hurdle for consumers.
And this is maybe coming at the question a little different way, but there is a real battle for the payments ecosystem for position. I mean, the basic, when I was a baby banker, payments was completely a bank-dominated, paper-based, batch-processed activity. And everything that's happened over the last 35 years of my life it's injected. The axis of innovation has shifted from, essentially New York to Silicon Valley. I mean, that's where payments innovation is coming from now. But banks are hanging on to the idea that we occupy a unique place in that ecosystem, and that we have a degree of trust and a degree of permanence, if you will, as a societal institution and as organizations that make us still the most trusted party in the banking ecosystem. I mean, I'll say that as a former banker, a current bank director, and a provider of systems to banks. So take it for what it's worth. But I honestly disagree. I don't think banks are going to give this one up without a fight, and there will be some real tolls exacted from the newer players in the payments ecosystem if they think that banks are just going to roll over and say, okay, Apple, it's up to you now. I don't see it, not with any bank I work with.
I want to bring, as we're on authentication, but a discussion that we were having out prior to coming in, which was around EMV. I feel like we need to go there as we're talking authentication. But your experience in the UK has clearly been chip and pin, and in most of Europe has been chip and pin. And can you touch a little about that as from an authentication standpoint? Because here in the US, we're struggling with chip and choice, or as even one of the major networks is really behind chip and signature. And I think your words was, that's crazy. Not to put words in it, but I mean, can you opine a little on just the power of the pin?
Yeah. First of all, I'm delighted that the US is finally making the bold leap into the world of EMV for card authentication. So the question there is around, I think EMV chip is a great standard, and it's proven in where it's been deployed in areas of the world, and the UK is a very mature, it's a 100% chip market now, EMV chip market now. It's proven in that market, it has significantly reduced, it's virtually eliminated domestic counterfeit fraud. What it's done, it hasn't stopped it, because what it's done is it's pushed that fraud over into territories that haven't adopted EMV, notably the US. So we still get cards being skimmed and mag stripe details being captured on the card, but rather than being used domestically, they're emailed over to their colleagues in the US, create a white plastic, go out and use the card. And I think in terms of the verification method, signature to me just isn't a verification method. I mean, I use my card at the stores in the US, and I just squiggle something. It's not me. They don't check the signature on the back of my card. Most of you guys probably don't even have a signature on the back of your card. I'm never asked for any further ID to verify I am the person entitled to hold that card. So a way of verifying that I am entitled to use that card is by using a PIN that is supposedly known only by myself. So if I can securely authenticate the card using chip and uniquely verify that transaction by entering my personal PIN, that's pretty much, I think that's a really strong case for and certainly a very powerful use case for fraud management, and it's proven in markets, in mature chip and PIN markets now, that it does help. What that does, though, is the fraudsters don't sit back and think, oh, I can't counterfeit these chips because the data's dynamic, I can't crack the algorithm, I can't intercept details. I can steal a card, and I can capture a PIN while it's being inputted. Okay, it's a given. But it's a lot of effort for me for just one card. So I'm going to attack other channels, and what they've done is attack the e-commerce channel. Mm-hmm. And although e-commerce transactions generally have grown, people are using their cards more and more to buy things online, the fraud has absolutely exploded online. I think around about 70% now of all the card fraud committed in Europe is on the e-commerce online channel, and that's quite a problem. There are technologies, there are capabilities to verify and authenticate transactions online. I think a lot of them are still quite nascent, and it's proving a very challenging area. And I mean, I'm sure that will also happen in the US as the US move to chip, and whatever verification method on those chips, hopefully PIN. You'll see the fraud will migrate to the online channel, and unless we're prepared and we have our defenses in place, we're going to get hurt significantly through online fraud.
And I think the key point, multi-channels, multiple devices. You guys can opine on this, but unfortunately there isn't a silver bullet. And I think a lot of people here, part of the impediment to EMV is, well, we know card fraud will go online. It will show, but saying, well, what can we do that will stop it all? We got to prevent, and I don't think there is that silver bullet. I think whether you're making a bill payment on perhaps on a mobile device compared to your PC, I mean, that could be a different set of authentication that needs to take place. I mean, is there a...
Well, and there's a different set of authentication that takes place, and then in some instances, it's a different set of people who hold the bag at the end of the day when it goes bad, right? So that's the other challenge when you look at and say across the ecosystem, for all the different players there, depending what levels of authentication and who had what certification, you know, at the end of the day, the music stopped and there's one guy without the chair and he's got to pay out the financial loss. And that creates some challenges about where people invest and then where do they want to put the customer sort of, you know, interjecting into that customer experience. That creates some complexities, right?
we've learned that managing fraud is really channel specific, that this FraudNet service that I brag about, FraudNet works incredibly well in online bill payment. But candidly, behind our credit and debit processing is Falcon, is the FICO product. We're a reseller of Falcon because we think in that space it's the best way to go to manage our fraud. We have a different fraud engine behind our P2P product. And to some extent, we're looking at how we take our experience across all of these different forms of payment and how we create that wonderful silver bullet kind of engine. And so far, pretty daunting and elusive challenge for us. We're just not sure that's possible, that a channel-specific strategy isn't at the end of the day the most effective way.
Seeing that silver bullet approach is tough, that's why we chose the bear rather than a werewolf. I don't think we can get to the werewolf.
Yeah.
Questions from the audience? We've got, I don't know if, speak up and I can repeat perhaps, or?
Yeah, so just to kind of go back to the whole threat state kind of again, you know, the social engineering attack, I totally agree that's one of the #1 ways, but then in addition to that, I really feel like the Chinese threat, the APT, and then especially hacktivism. I mean, how do you protect against those threats? And then especially since you're all FIs and you're rather large FIs. I mean, like the email attack you were talking about earlier. How do you know that wasn't an APT threat, and then now you guys are infected with an APT, and they've established persistence in your network, and it's sitting there? I mean, that's
well, can't prove a negative, but I'm reasonably sure I am not the victim of an APT at this time. Can't prove a negative, but reasonably sure. In point of fact, one of the things we've noticed is that the elements of fraud schemes, and Jonathan's comments about the organized nature of it are right on. In the small business space, right now, the online account takeover, where credentials get hijacked and money gets exfiltrated in fairly material amounts, those are usually followed 80% of the time. Those things are followed in our world by a DDoS attack on that financial institution or on an IP we manage for them. And so it becomes at that point, the bad guys are trying to cover their tracks. I mean, we know this. We're not that stupid, but we know that I mean, believe me, we lay awake at night worrying about this stuff. But the whole field of information security, fraud is only this much of it. The idea of an advanced persistent threat where somebody's trying to, understand your network topology so they can, as a nation state, shut you down. I mean, there are layers and layers and layers of security in a network like mine. I have a Tier 4 data center up here in Johns Creek. I mean, this place is a castle with a 21st century moat around it. It's bigger than fraud management, though. I mean, it's all about maintaining the integrity of your environment by knowing who's inside, what they're doing there, what they're doing, having a data loss prevention solution so that anytime anything leaves your network, it's inspected and you understand, you understand and have the ability to stop what's leaving your network. But it's a much bigger question than fraud. I mean, maintaining integrity is it's a 24-hour-a-day job for, in my organization, literally thousands of people. But DDoS has become one of those things that it's annoying at this point because we know how to deal with it, but it inevitably accompanies a fraud. It's a follow-on to a fraud.
I think the bear here is a good analogy. How do you stop a bear? How do you get away from it? If you're in your little hut in the woods and a bear comes along, what do? Do you shoo it away? Do you feed it? You want to, from what I understand, I've never come across a bear in the woods, but you want to lie low. Keep under the radar, keep quiet. There's lots of opportunity for the bear, and it will come snooping, have a listen, not get anywhere, and move off somewhere else. So I think it's almost about, in that respect, and to answer your question, about deflecting that bear elsewhere, hopefully. I mean, TSYS, I'd have to defer to our InfoSec team, but I mean, we get people trying all the time to break in our network, hundreds and hundreds of times an hour trying to break in. Multiple layers of firewalls, multiple sandbox systems. And it's just about being able, they'll try and they'll try and they'll try and they'll get tired and then move off somewhere else. It's too hard. I'm going to move off somewhere else, and they'll go and try and attack someone else.
And I mean, I think I've got a view from the risk forums standpoint, because I know we've focused a lot here on fraud, but over lunch I was talking about this. I mean, we view the DDoS, yeah, there's the use of DDoS for financial gain, but there's also people that want to do harm to the U.S. and its economy. And I think that can be a real threat to us in the economy. I mean, you look at what happens with a natural disaster and how challenging it can be to access funds. So just imagine some kind of nationwide attack on a payment system. Say it happens November 15th and payroll's not being able to go out. You know, what are the following implications behind all of that? So it is clearly something that we definitely didn't dive in today. We were much more, but I think it is a big issue. And you know, at the risk forum, that is something that we're definitely talking to folks about.
We're about to do our own internal war games, actually. We think cyber warfare is a very realistic possibility, and being who we are and what we do, we assume we're frontline. So, you know, there are lots of things I'm certainly not going to say in a public forum about what we do to protect our customers and their customers' money, but suffice it to say, most of us are really painfully aware of the potential.
We've got time for maybe one more, or we perhaps can get the drinks a couple minutes earlier. Clearly no hands are going to go up now.
All right.